even when you put that against the comps and the rest of the space, it doesn't quite add up. And so I think that's why a lot of investors do struggle with Tesla's valuation. You may like the company, you may like the products, you may like the visionary behind it, but it's one of the things I struggle with is this valuation. So now once it surpasses this 1 trillion, now I start looking at kind of the trickle down with the other opportunities in the space. And there are a lot of them, and a lot of them are just now really gearing up. So that's more of the focus that we have. And I think that's what a lot of investors, it's a rising tide lifts all boats kind of scenario.
Hi, and welcome to Behind the Wall at Investor Place. I'm your host, Joanna Macris, and today we are back talking about Tesla. The EV maker has had a very big move off of strong earnings results and a very large contract with Hertz to buy over 100,000 vehicles. That's the largest EV purchase ever. Stock is now hitting a $1 trillion valuation, joining the likes of Amazon, Microsoft, and Apple. Is there gas left in the tank? And here to talk about that with us is Taylor Ogan, CEO and founder of Boston-based hedge fund Snowbull Capital. Hi, Taylor. Welcome.
Thank you so much for having me.
So let's get into it. Tesla has now hit over $1,000. Is there more gas in the stock here?
There may be. I didn't think it would get here this quickly. I did think that it would eventually cross the big $1 trillion mark. But no, I think that there may be gas left, maybe electricity left. But there's, yesterday the move on a $90 billion in market cap move on a $100,000 order. If you look at the other 100,000 car order in the EV space, that's with Amazon and Rivian, and that already surpassed Tesla's move yesterday already surpassed what Rivian's market cap will likely be around $80 billion. So that kind of may put it in perspective a bit. But no, I think that for other reasons, they have 2 new factories coming online. They're really ramping in China, which is in a growing market. They're kind of maxing out in Fremont, but no, I think there is some gas left. I just don't know in the next 6 months if we're going to see a 200% move or anything like it's done in the past 2 years. But no, we may be. I don't think we're anywhere close to the top in the next 3 to 5 years.
How do we think about valuation? If you try to value Tesla against a traditional car maker, that's a losing battle. A lot of people say that you can't value that way. It's a ecosystem stock like Amazon. How should we think about what the stock is really worth?
There is no good way to value Tesla when you want to compare it to other automotive companies. But then when you want to compare it to some of the comps in the tech space, if you consider this a technology company, well, then everything's a technology company these days. And there also is not a good comp. So you really have to have an understanding of both Tesla as an automaker. I mean, a vast majority of its revenue comes from auto still, and that's not going to change in the next 2, 3, 4, 5 years, if ever. I mean, it's first and foremost an auto company. So I think that, I like to look at really some of the parts, because it is a company that encapsulates so many different businesses, right? And I'm not counting, the robo taxi or even the Tesla bot or anything. But seriously, the ESS, energy storage, that's a big chunk for Tesla. You also have maybe the ADAS part, which is very different from robo taxi. That's more value added. And then you have the core auto business. But even when you put that against the comps and the rest of the space, it doesn't quite add up. And so I think that's why a lot of investors do struggle with Tesla's valuation. You may like the company, you may like the products, you may like the visionary behind it, but it's one of the things I struggle with is this valuation. So now once it surpasses this 1 trillion, now I start looking at kind of the trickle down with the other opportunities in the space. And there are a lot of them, and a lot of them are just now really gearing up. So that's more of the focus that we have. And I think that's what a lot of investors, it's a rising tide lifts all boats kind of scenario. And we're seeing that just in the moves in the last week.
Right. So you hit on the fact that this is still largely a car company. I think 60% of sales are cars. What do you see as kind of future levers for growth that could kind of change our perception of Tesla's valuation over time?
I think when Tesla comes out with new models, not models that they've announced and they're waiting to really start production on, like Cybertruck, Semi, Roadster, but these cheaper models, these models that are catered towards the Chinese market or the Indian market or the European market, a hot hatch, for example. That's what I think is definitely in the pipe for Tesla. Maybe not in the next 2 years, but certainly in the next 5 years, Tesla is going to realize that the competition finally is here and coming, and it's going to need to compete on a model basis. So it's done very well with its 4 core models, but now I think investors will be really excited with these new factories coming online that will hopefully crank out new cars. And I hope to see Tesla do battery production in-house. Right now they don't, and they're missing some margin line there. But yeah, I think that the model expansion will be bigger than anything. And probably the second biggest part will be the PV and ESS market for Tesla, not just in the United States where it's doing okay, but as it expands into some other areas.
So let's talk about competition. A big part of the bear thesis on Tesla is that they enjoyed really early share gains, but that it's going to be all over now. You've got companies like, as you mentioned, Rivian. Clearly, Lucid Group is one to watch, also commanding a pretty hefty valuation. How meaningful do you think the competition is right now, and how do you think about Tesla's market share globally? Right, they maybe have 20% of the global market. Where do you see that expanding or not over time?
Well, in the United States, Tesla still has a commanding lead in the EV market and just the luxury car market. And I think that's not going to change anytime soon. Of course, Lucid will creep into that, as will Rivian. They're kind of in different segments, though, at the same time. The big market that we follow is the Chinese EV market. And that's where you're starting to see the competition really undercut Tesla's cars by at least 15,000 US dollars and offer similar range, similar features. And what they lack in that is the brand value, but certainly the supercharging network, which is very key to Tesla. But the technology out of these cars, the battery technology is superior. The energy density of the packs, they're already integrated into the actual chassis of the vehicle. So those are things that Tesla's actually trying to do and is so far unsuccessful at. But these Chinese competitors, they really are delivering these products. You can go and buy one in China right now. So I think in the Chinese market, as the NEV space and BEV space is growing, Tesla's market share, although its deliveries on a quarterly basis are growing, its market share is declining slightly. And that's okay, as long as there aren't others that are surpassing them in market share, which there may be soon. So no, I think that the competition really isn't here yet. The valuation I just as much struggle with Lucid and Rivian, but there are some undervalued names in the space. There are just a lot of names that maybe people in the West haven't heard of.
Yeah, let's talk a little bit about battery tech, because that's a big coup for Lucid, obviously, with the 520 miles, EPA certified range. Do you feel like Tesla is behind in battery technology, and will they catch up with the tabless battery and their future plans?
Well, it's important to note that neither company makes their own battery cells. At the pack level, they tinker with it quite a bit and tinker with the BMS and the inverter. And that's where Lucid has a lot of experience now with their Formula E division and everything. But Tesla has also been at this for a very long time, and its motor is incredibly efficient. And at what it's doing with Panasonic cells, Panasonic's newest cells, the 2170s that it's been using in the Model 3 and Model Y, it's still using the older 18650s in the Model S and X, but it's still being able to crank out some real top performance. I mean, it's the fastest production car in the market right now. So clearly, even with older laptop battery cells is really what they are still being able to get a lot of performance out of it. Now, when it comes to energy density at the pack level, that's where Lucid seems to be superior. And that's why Lucid has, a 520 mile range car. But the chemistry is also a concern of mine. These are nickel-based cathodes. Tesla's shifting towards nickel-based, but they're cobalt-based. And so obviously there are a lot of issues with cobalt, especially in the supply chain, but the rest of the industry is kind of moving towards these iron phosphate, LFP batteries. And you're seeing that all over China. They're making a comeback. And so granted, they're not as energy dense, but they're incredibly safe and they're the cheapest on the market. So you're also able to better make those structural versus cylindricals. It's more difficult to assemble those into a pack and still have this structural integrity. So I think that Lucid and Tesla's battery tech, it's not really their battery tech, it's more their pack tech, but they're both real champions, I'd say, in the numbers that we're seeing.
Yeah. So, I mean, this is obviously a manufacturing business and margins are important. And you hit on the fact that the Chinese makers like NIO have, fully outsourced manufacturing. Is there a concern that, a company like NIO sets its foot in the US market and could that have profound implications for pricing and margins for Tesla?
I don't see the Chinese brands coming over here in the near future. I think first will be Australia, New Zealand, parts of Europe. The US is really a difficult market to tackle, especially with all the concerns geopolitically between China and the United States. So I think that there is a stronger possibility that these Chinese EV brands will come out with new brands for the Western market. If you look at the NIO, for example, their vehicles with the Nomi little device in the front that has big hands and big eyes and talks to you as you drive. That's a feature that's catered for the Chinese market. In the US, that would be, I think, quite weird for a lot of people. So they will have to make maybe US specific cars as other automakers are making China specific cars. So I don't think that we're going to see much impact to Tesla. Tesla's got a long future ahead in dominating the US EV market. But the US EV market is only so big.
Right. What do you think about margins long-term for Tesla? Is this a 40% gross margin company? How do they get there? What are the levers?
I don't see them getting there in the next 5 years. I think that if they, especially as they drop down into the lower price vehicles, and if the big jump that we'll see is when they can do their batteries in-house. So once we are able to see that, I think right there, that's a 6% gain in gross margins on the automotive side. And I think that we could see even more growth marginally with the new factories. Because if you look at the efficiency of Fremont, it's quite terrible when you compare it to the Gigafactory 3 in Shanghai. It's brand new factory. And now it's coming online with 2 new factories that it learned everything from Gigafactory 3. So you have to imagine they're going to be just as efficient, if not more efficient. So once those really come online, then I see Tesla being able to really grow with its margin. But I don't really see it getting, it's already extremely high in the automotive space. But again, as they creep down into lower ASP, then of course it'll be more difficult to maintain.
Yeah. So, as you mentioned, these stocks have had big moves. Maybe there's a little more juice left in Tesla stock. What else? Where else would you recommend investors look? Names in the electric vehicle, value chain that maybe have not had these kind of moves that you're liking right now.
Yeah, my favorite name in the broader EV and battery space is BYD. A lot of American investors only know it by Warren Buffett owning just under 10% of the company, but nothing more than that. It started out as a battery maker, and now it makes more electric vehicles in China than Tesla does. So it's doing very well. I also see some plays in the LiDAR space. The names like Luminar, ticker LAZR. That's really, even just today, it's moving nicely on most likely news that Tesla may face some regulatory pressure with its full self-driving. So I see a lot of potential in the LiDAR space. You see robo-taxis that are actually able to drive without a driver in the driver's seat, and they all use LiDAR, whereas Tesla's still struggling with its cameras from 2016. So yeah, I think that LiDAR is a big space. I don't like all the names in it. The battery space is really difficult to gauge when it comes to what you're able to buy as a foreigner. Probably the best name in the space other than BYD is CATL, but you can't buy that as an outsider. So there are a lot of opportunities that we may see move on to the Hong Kong Stock Exchange in the near future. I'm not crazy about QuantumScape. I'm not really crazy about solid state battery technology in general right now, because we're already seeing this resurgence of the iron phosphate battery. So I think it's kind of a waiting game for directly in the batteries. But I think that some of these new names, I want to see them deliver products before I really start taking a $43 billion valuation in Lucid, for example, seriously.
Right. So, I mean, yeah, with that in mind, what is there a way to play the EV space from a car perspective at a reasonable valuation right now?
No, I don't think so. And you look at the companies that you may think are reasonably valued, and they're not EV players. So the likes of Ford and GM, they're not seriously pursuing EVs like some of these other companies that haven't even delivered cars yet are. So it's an awkward space right now. I think it'll really even out a bit in the next 3 years. But for now, I mean, it's you can take the ride on Lucid and Rivian. Among those, even with the valuation, I prefer Rivian. I think that they are going to be able to execute better. They're also not going after the exact trajectory that Tesla went after, which is starting with a very high-end luxury sedan and then moving their way down. Well, Rivian's just going after a completely different market. So I think that's more exciting. But still, I mean, I do, again, struggle with that valuation.
Yeah, I mean, even for Lucid, a $40 billion valuation for a car maker that's just now shipping in a luxury niche market. Is Lucid's market worth a $40 billion valuation?
I mean, yeah, is it nosebleed high? You have to, again, look at the comps. Investors should ask themselves what they would value Tesla stock at if it only had Model S. And would they still have this established brand value and supercharging network and Elon Musk to add to that? Obviously not. But on Lucid's end, definitely a more luxurious and more efficient sedan with similar performance. It's still high if you ask me, but again, rising tide lifts all boats. Tesla's the tide.
Yeah, I hear you. Thank you so much, Taylor. Really appreciate your time and insight.
Of course, anytime.
And join us again.
Thanks.
Thank you.
Thanks for watching Behind the Wall. Please like, subscribe, and comment. And check out our website, investorplace.com, for early access to videos and an even more in-depth look.